Bing bong. I am live with another edition of the State of Bitcoin podcast. And I'd like to thank everybody listening on any podcasting 2.0 apps such as Fountain and leaving me boosts. So I've got another boost from Barn Miner. So shout out to Barn Miner, a Tampa legend. He said Benny is building, Tampa is where it's at. And so that he's referring to the last episode. If you didn't listen to it, it's about the grassroots movement with Benny Hoddle, Benny Blader, a Bitcoin Lightning dev, overall great dude. And starting the grassroots movement down here in Tampa. And then I'd like to thank my sponsor, Coddle.co. That's CODL.co. They have the best punch plates in the biz. So get your Bitcoin off of an exchange, get it in cold storage, and store those seed phrases with a punch plate. Use promo code GREENCANDLE at checkout. That's GREENCANDLE, and you'll get 10% off your entire order. I'm really helping you guys out here. You know, I'm helping you get your Bitcoin off of an exchange and saving you a little bit of dry powder so you could buy some extra sats. So be sure to do that. And now, with all that mouthful, I do have a very special guest sitting in the waiting room who's actually got to deal with Fountain. We could talk about that here in a second, but I got Mike Jarmuz, the man, the myth, the legend. Muzz, how you doing today, man?
Awesome. I'm doing awesome, and thanks for having me. And this is a great way to break up a Thursday. So really cool chatting with you.
Yeah, for sure. So, obviously you're one of the founding partners of Lightning Ventures, and you guys have a very special deal going on with Fountain. You mentioned it a little bit in pre-show when I was telling you I was going to read those boosts. So why don't we just start there? We'll start with what is Lightning Ventures for those who don't know, and then what is the deal that you guys got going on with Fountain?
So Lightning Ventures is a boutique, Bitcoin-focused VC group, a network that does a few different things. First off, we invest in Bitcoin startups, supporting awesome companies that we all know and love. We invest a little bit through a very small fund, and then we offer those investments to anyone who wants to participate on a deal by deal basis. You know, for a low minimum of say $1,000, you could invest in a real deal, in a real Bitcoin startup, and then see how you can help them. You know, maybe you have some superpowers that you are able to do, and it leads to very good things and networking and partnership opportunities and lots of other things as well can come of it. So that's the focus, is trying to build out a really robust group of amazing Bitcoin all-stars, and then invest in the best companies that we can, champion them, help them as much as we can moving forward. And that's what we're all about.
Awesome. So yeah, then what's the deal? What's the deal going on with Fountain? Are you guys helping them raise some capital right now?
So they haven't announced it yet, but they had a successful round right now. And to close it out, we have an allocation in Lightning Ventures that can be announced publicly and spoken about. Unlike a lot of those type of investments, they can't be solicited publicly or talked about. Fountain is an exception to that right now, so we can mention it. But yes, you can invest in Fountain, the podcasting app, on the same terms as the other VCs that participated in this round. And these are not token sales or ICOs or nonsense. These are real investments. So it's kind of cool. If you love a company or a fan of theirs, you can also get started with angel investing for like $1,000, and you can learn. And there's no shortage of things to learn along the way when you get started in this sort of thing. So that is the deal with Fountain.
Awesome stuff. Awesome stuff. Well, let's bring it back then. So for those in the audience who may not know you or not, heard your story, why don't you tell us a little bit about your background and how you got into Bitcoin?
Sure. So, I saw Bitcoin on a message board and dismissed it like a long time ago. And then it resurfaced, right around somewhere in that $3 or so area, somewhere around there. The Kaiser report right around then was, started really talking about it a lot more, mentioning it more. And I started just keeping an eye on it then. And I had a bar in Manhattan where we had the second Bitcoin ATM, at least at the time. So right around that era. So, I still have a valid Mt. Gox claim. Let's see what happens. Learned a lot of lessons, didn't take my own Bitcoin security very seriously back then. And started around then. So that's when I got involved. And then as far as Lightning Ventures goes, we're only about a year and a half old. And that's the sole focus of what I'm working on right now is Bitcoin venture capital, helping these companies, and doing as much education and, trying to make it more inclusive. These are investment opportunities that everyone should have access to. And it's still very hard to get access to private investments. There's a lot to navigate there. So just trying to do my part in the evangelism of all that stuff. Before that, I was in the music business for quite a while, did a bunch of stuff there, have had a bunch of small businesses in my life. I also traveled around with some musicians while I was doing that stuff on tour, and had a little flower kiosk, and I had a cafe in New York City. I had a retail store in Arizona and Tempe, kind of like a Hot Topic sort of place. And I've just had a bunch of different weird experiences in my life. I drove a taxi in New York City. I lived on a Mississippi plantation farm called the Shack Up Inn. I've done a lot of weird stuff.
Man, the man of mystery right here. I mean, you've done it all. I mean, I feel like any kind of weird, quirky job, you seem to have done, and it's all brought you to Bitcoin, which is pretty interesting. But I want to get started in like kind of the venture capital space, because what you mentioned is that, Lightning Ventures has been around for maybe a year and a half, which, brings us to maybe late 21 or so. And that's kind of been an interesting time, just like overall macro wise, right? We've had like a lot of uncertainty, obviously, with, the extensive money printing, the extreme inflation we saw, just from that. And we're kind of seeing the after effects with that. So, on just like kind of a broad scale, since you got started in this venture capital, side of things, has the, I guess, overall environment changed dramatically now that, we're kind of starting to see some cracks in the overall macro environment?
Yeah, everything ebbs and flows. And I made my first private investment in 2015. So, it's not like I have multiple cycles under my belt, as far as 2000 and others, in terms of private markets and venture capital. So, but there are times when things trade at significant discounts. And at those times that things trade to significant discounts, capital is usually not as easily accessible. Okay, so rounds end up taking longer and, dragging on a little bit longer, and things obviously always are still closing and happening, but it's just a much more cooler environment. Sort of the period where, maybe we really liked a company, but we had some things that we needed to button up. By the time we circle back, maybe 2.5 or a couple of weeks later, the round's full and we're shut out. And that sort of environment is no longer here, which is nice. I kind of like a little bit more of a calmer environment than that, instead of the FOMO driven type of stuff. But at the same time, it's too cool, because there's a lot of founders who can't get over the line. The word oversubscribed is seen less and less, because, maybe they got 50 to 80% of the amount that they had originally intended to raise. And that's enough to kind of get to the next milestone and do what they need to do. They don't need all of it right now, especially given the surroundings, so then it's kind of like, okay, well, we're not like closing the round and announcing it just yet, but like no longer in active fundraising mode, like in active build mode. But then, like, if the phone rings, we'll still take a check. You know what I mean? Like any inbound, just kind of like that period. So that kind of becomes a new like end period with stuff. But yeah, it's definitely cooled off. I mean, even just from a year and a half ago, when we did our first syndicate or first started investing through our little small fund, This is way different. This is probably as slow as it's been. It's not even like it was slower a month and a half ago. Like I would say right now is probably that.
Yeah, and that kind of leads to, like, I guess an interesting time and interesting discussion with all of this, because, not only with the weird macro environment that we've also had kind of a lot of, I guess maybe not Bitcoin FUD, but crypto FUD, which seems to affect the Bitcoin market, right? We've had FTX and some of these other companies kind of, blow up on the spot, go up to extreme evaluations, and then seemingly go bankrupt, right? We're seeing a lot of exchanges and other, I guess, outside Bitcoin companies, maybe some Bitcoin mining companies and other things kind of go bankrupt as well. So is that kind of, I guess, do you think playing a little bit of a role when it comes to, I guess maybe some of these fundraising, or are you, I guess, dealing with more, I guess, Bitcoin maxis where they kind of understand the ebbs and flows of the market and they just really believe in, the technology of Bitcoin?
Okay, so it's not just like this phase that we just went through, Arrows Capital, FTX, BlockFi, Celsius, the smaller ones, the HODL knots, all of these other things that just kind of happened. Okay. I don't think that is it, because, look at the NASDAQ. Look at the growth name stocks. I mean, look at the way everything is down. Everything, even housing. And I'm not like this type of guy. That's like a Dylan LeClaire type of stuff. But just looking at the way the wealth effect is, when the 401ks, the statements come out, like the layoffs are accelerating. GM just the other day announced another 500. It's everyone starts to tighten up, and there's kind of no avoiding that. But it feels like Bitcoin is holding up a lot better than this other stuff. I mean, Wish.com was an IPO that I had. It went from $32 to like 40 cents, which is probably where it's trading at right now. Like, people think Bitcoin is like volatile or not as safe. All of them, Get Around and every IPO like hot name in the private space has just been such a terrible IPO lately. And that's where I have a lot of my investments, so I keep a pretty good eye on that market. Something like Klarna getting cut from 48 billion to like 15. That's a big haircut. The Impossible Foods, those type of big names have just seen their valuations get killed. SPACs have been canceled. Circle, the USDC Circle, they had a failed SPAC of like, it was supposed to be like $9 or $10 billion. Just ended up not happening at all. So you have this like the worst IPO market, maybe potentially on record, I believe. I don't quote me on that, but I believe it's the worst, slowest period on record. So, a lot of liquidity dries up real quick. And I think that it's just felt with everything. And I think Bitcoin is surprisingly holding up pretty well.
Yeah, and it is. I was kind of making that point the other day as well to somebody I was just talking to anecdotally. So, it has kind of been just like floating around this 25K ish mark, where it seems like everything else is kind of falling and crashing. And you did mention something interesting when it comes to a lot of these IPOs and other SPACs and everything else, just showing like extreme volatility in the market. Whereas obviously kind of the knock on Bitcoin for quite some time was Bitcoin's too volatile. Bitcoin's too volatile with everything, right? When it comes to the USD price, exchange rate, whatever you want to call it. But now that we're seeing, a lot of money just kind of changing hands, and seemingly, volatility in the stock market is becoming the new norm. It seems like, we're seeing stocks go up 100, 120% in a day and other things like that. IPOs crashing and burning, just kind of like you mentioned. Do you think that that's going to, I guess, in a sense, almost help people kind of just stop that argument and that negative, I guess, perception around Bitcoin when it comes to volatility, and then maybe, I guess, move a little bit closer to educating themselves on the technology behind it?
Yeah, I mean, volatility is like the new norm, right? And I think like some people want it. I mean, I think the Gen Z want, YOLO type of returns and stuff. So, I mean, yes, super. I mean, multiple days where the NASDAQ sheds like 5%. Like there's been a good handful, and those type of things like never happened, like ever, really. So it's like, oh, NASDAQ's down another 2.5% today. Like this, just like every day, like that's insane. That's really nuts. But once you understand Bitcoin, right? Like it doesn't really matter. Like the price of Bitcoin doesn't bother me. I don't make a living trading. I mean, a good trade is fun if you can hit one, right? Especially at the right time. But like, I don't make a living doing that all day. So for me, like the DCA, just stacking, hodling, like I don't get emotional over the price of Bitcoin. I do get pretty emotional over the price of a stock. That definitely affects me, and what I call the sleep indicator, which is if you can't sleep at night, you might have too much stock. Okay, or if you can't sleep, then that might not be a good trade that you're sitting in. So the Bitcoin thing never bothers me. In fact, nothing would make me happier than seeing it just bump around 23 to 28K for the next year and a half. Like that would be great. That would be great. Just keep stacking, keep getting it. Because once you get it, the USD price eventually doesn't really matter to you. I mean, it doesn't matter to me. Maybe it does to people who just get in and, if they're putting in $100 a week in their Swan or whatever account, and then they see that they're down 14%, maybe it bothers them. But I think once you get it, it doesn't bother you anymore.
Yeah, no, I agree with you 100%. I think when I first got in, I was just checking the price every single day, and then now, I have the DCA set up, so I just don't even really look at it. The only time I really think about the price is I get the notification on my phone, like, "Hey, you bought Bitcoin just now." I'm like, "Oh, all right, nice." And so I kind of check it out then, but really, I just don't really, actively look or care about it. Maybe if there's something going on Twitter or something else like that. But you mentioned, when it comes something to stocks and Bitcoin, right? You kind of have that almost like parallel where you don't care about the Bitcoin price, but you care about the stock price. And you said the average pleb probably feels the same way, especially people that have gotten in and early on or have been in it for some time, learn the technology. But the one thing that worries me is a lot of these companies that maybe obtain Bitcoin through sales or, kind of require it that way. And, maybe they're trying to hold on to some and lose some of their value and do some savings in that sense. So, for those companies, I know you, I know you kind of, you don't have your finger on the entire market or anything like that, but for Bitcoin kind of floating around those numbers that you said, like 23 to 28K, do you think it would be kind of detrimental for, I guess, not Bitcoin, but for more of like the outskirts of some Bitcoin companies?
To what?
Like basically, like, we've seen Bitcoin miners kind of had to capitulate at this point. We've seen a lot of them have to sell off. Whether they kind of leveraged by either getting loans on their Bitcoin miners or getting loans based on their Bitcoin and then having that price kind of plummet. Do you think that like kind of long term, or I guess a longer term effect of having the Bitcoin price a little bit depreciated from its all time high would kind of cause, I guess, a little bit more pain in the business side of Bitcoin?
No, I don't think so, because there's the price, and then there's adoption and use cases and innovation, and that on a chart looks incredible. That on a chart looks incredible. So I think the price becomes secondary, and I think that companies holding a Bitcoin treasury, some sort of Bitcoin treasury, which every Bitcoin company has some sort of Bitcoin treasury. Some of them are much greater. Okay. And in a bull market, you're literally, like, I was thinking about this the other day. Okay. It's like Back to the Future. It's like your own time machine of going back 3 quarters, 2 quarters, and you have a whole different number for that month. Okay. If you are holding, let's say 90%, 70%, 80%, as close to 100 as possible in a Bitcoin treasury, and have been, and are accepting Bitcoin and stack, you're going to, like, when we double from here and triple from here, you're going back and you're just having an insane run, okay, on those months that are behind you, and not only that, but you're extending your runway with the price going up. Everyone calculates their runway in dollars or in Bitcoin at the time. We have, 17 months of runway. This is our net burn. This is our growth rate. You can project things. Okay. But when you're keeping that in Bitcoin and you have a 30% up month or 18% up month or a 10% up day, like, what did you just get? Another 4 months of runway, assuming the price stays there or keeps moving. It's like, it's really interesting to think about what happens to your company in these traditional sort of ways.
Yeah, for sure. And it definitely is pretty interesting, when it comes to that. So that's, it just kind of struck my mind when you were talking about the price, just kind of how companies view holding Bitcoin and other things like that. Because, I guess from just like an outsider looking in, it does look, it looks good on, Twitter and kind of the other mediums where people kind of, jump on board of these companies who have been, whether it's a miner or something, have been hodling Bitcoin. But in turn, the price falls dramatically and then they have to sell a lot of it off at essentially a loss, and it ended up biting some companies in the butt. But I think, as now we're kind of floating around that price, the companies that have sustained and been able to kind of ride this wave are probably better suited in the long run, just kind of like you're saying, when we'll be looking back to this time, and as Bitcoin moons or skyrockets or whatnot, even if it's just doubles or whatnot, they'll be sitting pretty, opposed to some of these who had to sell a bunch of their Bitcoin off. But I want to get into a little bit more about Lightning Ventures, kind of how you view investing in companies, because I've heard you speak about it a couple of times, and I think it is pretty interesting, the approach, because some VCs are more hands off, some like to be kind of in the weeds. So when it comes to viewing these Bitcoin companies, you get pitched, I'm sure, ideas and companies all the time. So how do you, I guess, view a company based on one, like, if you want to invest in it at all, based on a pitch or talking to a founder or whatnot, and two, like, kind of what's your interaction level when you invest with a company?
Well, so the interaction level is first off based on how much you're welcome, right, by the team, how much they kind of bring you in the tent. And there's also proactive and reactive, right? There's reactive VCs where founder says, hey, can you introduce me to this person? And then you do that. And then there's proactive, which is like, hey, I just had a conversation with this guy. I think this would be a great integration or partnership for you, and to do those things. So we're fairly new, and we don't have this type of typical model that other VCs have in terms of some management fees and other things right now. So we don't have a big budget to do a lot of these things, but my entire Friday is just open to hang with founders, and we have quite a few. And, sometimes you get pulled in, sometimes you're not involved. Sometimes there are certain, we can't do anything for Strike. Okay. We can read their updates. Maybe it's a hiring thing, but like, I don't have like FaceTime with them. Okay. They're beyond that. We were lucky that they let us participate and, get our network, and they wanted the Bitcoiners to participate in a round. We were a very good vehicle for that. And they have an amazing team, and like, that was cool. So I don't spend any time with them. Even same thing with, say, an Unchained Capital. Maybe there's a partnership or an integration or something, but it's a whole different deal. But companies at an earlier stage, I might be talking to all the time. Maybe they're applying for licenses. Maybe they're doing things. Maybe they have a problem. So sometimes I'm engaged, and if I haven't caught up with someone in a while, I'll just ping them, and we'll hop on a call, and there's always something good that comes out of it. Okay, so I know that I do that, and I know that we do that, and I want to maintain that reputation, like it's important. So just to give you an example, one of our companies, Slice, an ad tech company in Bitcoin, somebody in our network worked for a very large ad network and was able to get their application approved, get them in. Like, the world's their oyster. This was the most important thing that needed to happen for the company right then. And it happened in a couple of days. And now we're 2 weeks away from a whole new thing for this company, right? And that was facilitated in the Lightning Ventures network. That was in our group. That's the goal. Okay, is to be able to do that. And by the way, that company actually offered that person some advisor shares, and now he's on their team and going to help them succeed forever. Okay. He didn't even invest in the company. All right. But those are the type of things that we're trying to facilitate, that we want to facilitate, and it's great for attorneys. It's great for an attorney who might review a one-page document for free. Maybe they're a fan, get to know the company, and then it's a client relationship. That's great. And it's trusted, trusted people. So same thing. Does anyone in here is anyone an iOS wizard? We need someone to help us get this thing approved, right? You never know what they turn into. So that's what I'm trying to do. So that's my involvement, right? I try to be involved, and it's still up to the company, and it's up to a number of different things, but as much as I can be. And I hope that we continue to build out a more robust system of a playbook and partnerships and other things, right? Whether you want to design the booth at your upcoming conference and you need a tablecloth and some t-shirts and whatever, to, hey, we need some top of funnel help, like with LinkedIn, like we need to, whatever it is, okay, B2B stuff, and have more of a playbook there. As far as what we invest in or looking for, the syndicate model is different in that we want to invest in the best stuff that we can and make that available to other people too. Okay, we don't have a large fund like these other Bitcoin VCs. Maybe they're taking board seats, leading rounds at a large scale. Okay, we don't have the ability to do that. By default, we can lead rounds at a very early level, right? Which comes down to maybe negotiating the terms and participating, right? So we can do that, but we don't have that next step. So we're not doing that. But what do we look for? Well, look, I don't have any hard rules other than, I never invest in uncapped notes, of course. But things have to be at a certain level in a company's cycle to be able to take an investment from anyone. Okay. This is not, we are not hackathon investors. Okay. That is not the type of deal here. That's like, I love Bolt Fun. I love everyone else who's doing that stuff. But that's not us, right? You have to be incorporated. You have to have incorporated properly. There are other things to think about in terms of options pools and lots of things that can happen down the road, right? So you have to be at that point. And personally, I don't love pre-revenue, pre-product stuff. That's not to say that we haven't invested in a number of those things. But I mean, the sweet spot is right when you have an MVP, you have some traction, and you're moving, okay, with a month-over-month growth rate of some kind, whatever KPIs you're looking at, how long people are using it, how often they uninstall, what's an active user, and you kind of start figuring your company out. That's a really nice spot to come in and start investing. So, the teams that have worked together before, teams where it's not maybe their first startup, they've done this before, they've done something before, is always nice to see, especially teams that have worked together. And yeah, I mean, we've invested in a few things that aren't maybe venture-sized returns. Okay. But that doesn't mean that they're not fantastic, amazing companies and will provide a great return. It just might not be a venture size return. And nobody should get upset with that if you're a founder, that your product just isn't big enough, or the TAM isn't big enough, or whatever it is. You still have to build whatever you're building. But the reality is some people only swing for the fences, the Babe Ruth effect. There are a lot of VCs who, maybe you have a fantastic business. Maybe it's even positive cash flow. Maybe it's even a great business, but it doesn't have those outsized returns that a lot of VCs need to make it work on the structure for what they're investing out of and their LPs at the end of the day.
Yeah, I mean that was just a great rundown of what you guys all look for and everything like that. But I want to dive into like the founder aspect. So when it comes to founders, right? I mean, there's just a basic general thing. Some people make it and some people don't. And when it comes to businesses, and a lot of times it has to be on the back of the founder, whether how resilient they are, kind of like mindset, all that kind of stuff. Because obviously, running a startup and kind of building something from scratch is not an easy thing to do. So, I guess like, do you look for anything specifically, personality wise? I know you kind of mentioned a little bit more about experience, but is there something, maybe not as like resume focused that you look for in founders when you're kind of discussing and maybe ask them a couple questions about that?
It's always good to see somebody take nothing and make something, right? As much bootstrapping as possible before even the thought of taking an investment. And somebody who thinks, oh, I just had a great idea, I'm going to go out and raise $2 million is like a giant red flag. That is not something that you want. Someone who maybe misrepresents themselves with, oh, so-and-so is, they're in the round, which so-and-so is not necessarily in the round, or we have X amount of dollars booked in revenue, but it's really not revenue, it's GMV. And the revenue number is actually really small. Now, did they not understand the difference? I don't know. But a lot of these, a lot of founders sometimes need a little bit of an education there too. Did they purposely misrepresent themselves? I don't know. But definitely things that kind of send up red flags, as well as maybe weird personality quirks. Maybe you've never spoken with someone and they just book something on your calendar. Like that's the best way to make an enemy. Not a good idea to do. Or maybe the founder just doesn't have it together. Have a Google Drive, have everything kind of in there, your presentation and an executive summary, maybe some early version of a cap table or whatever you have done, some corporate documents, maybe you have some early KPIs, maybe you have a 10-page marketing ramble that you did at some point in time on kind of a go-to-market plan. Stuff that in there. Stuff anything that you want that's noteworthy before you kind of go out and start trying to get some investments.
Yeah, and that's a great point on like the timing of the venture capital stuff, because I think that's probably gotten a little bit less, but maybe you can tell me I'm wrong here, because I think I would imagine that a lot of I guess founders are kind of jumping in at maybe like the FOMO time of things, when you saw Bitcoin price and other things like running up, and that's when they thought their time to get investment was, and that's when they would say, hey, I have this idea, I just need a couple $1 million to make it happen. But are you kind of seeing a shift in that with founders where they're kind of, I guess, expecting money to come a little bit slower during this like kind of overall macro time, so you're not seeing as many with, I guess, unrealistic expectations, or maybe showing those kind of red flags?
Okay. So the oversubscribed party round, the big number, that hasn't happened now. And, valuations do ultimately matter. Things matter. They in the uptime, it's all about growth, right? It's talking about growth and inflated valuations. And in times like this, it's about defense. It's about your product's not live. Don't spend money on marketing. Like, what are you marketing right now if your product is not live? That is a monumental waste of money. And our best founders 8 months ago instituted a hiring freeze, tightened up their ships all the way around, raised a small round back when it was a little bit still better, raised a small round just to pad their runway a little bit, even though they didn't need it. Okay. Couple $100K, something, and batten down the hatches. Okay. That's what was smart. And that was great. And not everyone does that. Everyone's going to do whatever they want to do. But in this environment right now, it's about defense and it's about sustainability. And each one of these outcomes that I've personally had in a company that's outside of Bitcoin all has a different learning. Okay, it's very interesting to see what can happen. And it's very interesting to see at the end of a company's life when they're dissolving and you get that letter from the founder, okay, that he's sharing with you things that he's learned. And of course, he will start another company and he wants to do things right. And like this happens, it's life. Okay. But when it happens well and you get an inside look on a lot of things, like, hey, everyone was throwing money at us a year ago and we didn't take it. And hindsight, we probably should have took a little bit more when everyone was throwing it at us so that we would not be dissolving. Okay. So there's that. There's hindsight. Hey, we raised in an absurd valuation at the highs and now nobody wants to invest. Okay. So, as a founder, you think, oh, I want the highest valuation possible. Okay. I want to sell as little of my company as possible. And then if you fail to grow into that valuation, you just never raise again and your company's done. And not everyone really thinks about that. So all of these type of things happen. Or, hey, it looks like the company's on the ropes. Okay, they're ready to freaking tap out. And then they pivot last minute, they rename, they do something different, and there's a whole new breath of life. You know what I mean? Those type of things happen as well when it's not looking great. You know what I mean? And vice versa. So there's just so much to learn through like experience.
Yeah, and I mean that's very interesting that you bring that up because I think one of the hardest things just from just watching like Shark Tank and some of these other things, like talking to some founders, I think one of the things that is pretty difficult is the valuation aspect. And like you said, just from like an outsider looking in, it seems like just from a founder's perspective, it would be advantageous to raise at the highest valuations because you're kind of thinking in the short term, you're like, oh, I'll definitely grow into that. But it is interesting that you're raising, like it could be some problems and some issues like later on down the road, when you have maybe a tougher macro environment and capital or liquidity is a little bit tighter or closer to the vest and people aren't really throwing money at you. But, I guess, how do you, I guess, help founders, value their company? Do you help them do that if you kind of come in at an early stage? Or is it generally speaking kind of, the founder or, somebody in the company that's evaluating the company and that's kind of how you determine, X amount of shares per, X amount of dollars?
Well, okay. So first off, let's talk about the types of instruments in which most of these are at the earliest stages, which is not actually a priced round equity type of shares deal. It's usually done with a note, all right, which is a safe note, which is a simple agreement for future equity. That's what a lot of early investments are. Sometimes they're priced super early, but a lot of these are safe notes that convert at a future financing. So you don't actually know the valuation that you invest in, but there are certain provisions like a cap. Some outside the US have what's known as a floor. There's an interest rate if it's convertible debt and not a safe, but still a note, same deal. Just there's a maturity date. There's a lot of other things that can happen in there, but that's how a lot of these investments are made. So in terms of negotiating, well, that depends on a few different things, because if your company, let's say, has a lead investor and $1 million of a $1.5 million round, okay, there's nothing I have to say about the valuation. It's done. It doesn't matter. I either like it, okay, we like it and are going to participate alongside and start our journey and be on the same cap table with everyone else, with all of our interests aligned, and help this company, or we're not. There's no different deal. It's not like, yo, you get this discount and you get this thing over here and then we'll take this over here. Like, that's not how it works. So everyone's on the same terms. I really have no say in that type of situation. You just are in or you're out. If a company is looking to do their first fundraise and they're just getting started, okay, we could in effect and have negotiated a valuation that I like, okay, that we agree on, and then we'll be the first maybe 250,000 or so dollars into the company, whatever on those terms. Now, there's a document that's called a most favored nations clause. Okay, if that's accompanied with it, okay, and they go out and they raise from someone else on better terms, they have to come back and give us the same terms and amend our document. Okay, that's a most favored nations, because I'm taking the risk, right? If this thing has a $10 million cap, okay, and we're the first investors and the first ones there, and we love this thing, and then they go out and they raise for somebody else on an $8 million or a $7 million cap, that's just not fair. We're the first ones in and we're their biggest fan. So that's another document that can kind of add for some protection there. I like to be on good enough terms with the founders where we don't need that document. Okay, they will just do that because that's the right thing to do, and they find us helpful and we are on their team, right? So that has happened as well in the past. So if the company hasn't raised before, we can kind of come to some sort of valuation. Okay. But as far as valuing your company, you know, every industry has different metrics. You know, there's SaaS valuations, there's CPG valuations, and everything else in the world that have different multiples. Okay. So in normal land, there are normal deals where a company would have, you know, 900K in ARR and they're raising it a 16 million or $20 million valuation, and they have plenty of previous and co-investors, and like that's a normal deal that makes sense, right? And there are many deals that don't make that kind of sense, and it's a binary outcome a lot of the time, and that's pretty much that.
Yeah, I gotcha, and that all makes sense. So now let's bring it back a little bit to Lightning Ventures, right? So we're just about, I mean, we're in the third month here, starting like last month of the quarter. So obviously, like about 3/4 of the year left. You know, what is your overall outlook for 2023 with Lightning Ventures? Like, what are you guys looking to accomplish? Are you looking to, you know, do you have a set number of deals, that kind of stuff, or are you just kind of, you know, I guess riding the wave and seeing how things go?
Well, here's the thing. It's quality over quantity, but right now there is a quantity of amazing companies in the Bitcoin world. It is unbelievable. And we've been going at a pretty unbeatable pace. We've been moving a lot. I think we're going to slow down just a hair here and reevaluate some things. But we have such a great pipeline of amazing companies that we want to roll out. But it's also depending on investor appetite and demand, okay? Because we are a syndicate. We don't have a $30 million fund that we're deploying out of. In fact, if we did, that would be nice right about now. If we did have a nice $21 million fund, that would come in very handy right now. So, you know, we need a lot of things to cooperate with us. You know, we have 4 live deals right now. That's a lot. You know what I mean? That's a lot. And we're starting to have some fun with them and learn new ways that we can play around with the laws and some of these other offerings that can be advertised. And I'm playing around with, you know, the idea of bringing in a crowdfunding portal type of environment where people can invest in other things that I'm working on, sort of in my secret lab, that kind of skirts a lot of these, nonsense accredited requirements. So what do I see for that? We have so many good deals right now, bro. We're going to hit the pause button a little bit. We're going to button up these 4. I wish I could talk about all of them. And we have one more that's coming. And we're going to continue to just support our companies and keep doing what we're doing. I talked to Roy from Breeze today. I love him. There's a lot of stuff going on with potential integrations. And we're just going to continue to just keep doing what we're doing. And hopefully the markets all cooperate. You know, I mean, I thought we were getting a relief. I thought that the worst was behind us, I have to say. And as Lightning Ventures, really the bulk of a lot of what we did was through this entire bearish period. And let me tell you, like, it was not fucking easy persisting through this. Like, we have freaking it is like a serious challenge. Okay. And we've deployed over $6 million. From plebs, from our fund, like getting people involved, like helping these companies, like that is fucking hard. Okay. And it's not like we raised, 10 million from LPs and just deployed it. Right. It's deal by deal, and it's like a lot. So I would love to keep running. I would love to keep running and growing and do more education and stuff and do more content and get people together. I want to have a whole mining side, a whole mining side where we're able to facilitate partnerships on the back end, even if we're not investing. By the way, a lot of mining companies are incorporated as LLCs. There's a whole other component with a lot of mining things that make them a little less friendly for venture capital. Okay. But we have a ton of partnerships. We have a ton of a stable. Okay. So like, what do you need? You have a ton of miners. You want to buy a ton of miners. You have a ton of power. You want a ton of power. Something else. Which one of those are you? Let's field it on the back end. Let's facilitate the partnerships. You know what I mean? Maybe we can have a great little business there. So that's something that I'm trying to put together. Develop the scout program. If somebody knows of a founder that wants to raise and wants to connect us, that's awesome. And we share a percentage of those deals when that happens with the person. That's not a handshake deal with me. That's a real deal. DocuSend, the whole shebang. So would like to do that. Yeah, I think that's about it. Maybe figure out how to use some of these fancy dancy tools online, podcasts and this, that, and the other thing,
Yeah, man, I got it. But I mean, the one thing that gets me just pumped up from what you were just saying is that you have so many great companies coming to you, and it's been a bear market, right? I mean, obviously that the phrase on Twitter has been, bear markets are for building. And it really, from what you're saying, it seems like that's really going on. And a lot of these companies are going to come out stronger on the other side. When we maybe get a little bit more of a friendly macro environment and we get more people kind of, deploying some capital. But for those listening that maybe want to join the syndicate or other things like that, what are maybe some of the requirements for a retail investor or something to do that? Do you need to be accredited? And if so, like, what are those kind of things? And how do you join the syndicate? Is it through your website or some other means?
Well, the absolute easiest way is to fill out the LP application, the little application that we have on our website, which is ltng.ventures. Okay. If you do that, it actually bypasses like a 2-day wait period that they have on the platform, and some of the other sort of registration hurdles. Okay, so 100% the easiest way is to just fill that out. Okay, and we'll send you a custom thing. Now, yes, you do have to be accredited. In most all cases, okay, let me just put that asterisk there. Most all cases, you must be accredited, okay? And that is a self-certification process in line with the way that the law is, okay, which comes down to you stating that you're accredited. And if you don't know what those requirements are, that's that you have made $200,000 last year and you have the expectation of making it this year. I think that's a pretty gray area, because if you think positive, you're certainly always expecting that you're going to have a good year. So, but the government says if you expect it, then click the button, you're accredited. So think positive. You can also have $1 million in net worth, excluding your primary residence. That is another way to check the box and click yes. You can also have some FINRA designations, like a Series 7 or maybe a 65, 56, all these kind of things. They let those with certain FINRA licenses have it without any income requirements whatsoever. And then there's some other weird, vague verbiage about what qualifies. It's very, very gray. And that's a self-certification process. So click the right button and get started. But yeah, your tax documents will be in there. Your consolidated K1s. Likely there will be no activity, so you don't have to give that to your accountant every year, right? If you invest in Fountain and then there are no liquidity events or nothing happens to Fountain for 3 years, for however long, there's nothing really that you have to report. Okay. And then Fountain is acquired or something happens, right? Then there's an event there. And there are a lot of crazy loopholes that fancy people use to get to pay no taxes up to $1 million on a QSBS, which is a qualified small business company who happens to file a paperwork at the very early stages, and they become that. And then all of their investors pay almost no tax. And it's a weird little loophole that's out there. We're trying to learn all that we can about that so we can advise our companies properly when they want to do that, like a 409 election on your stock options and these type of things. So LTNG.ventures, our portfolios on there. If you're looking to raise, you can fill out the intake form on the raise. There's a mining side there too, where someone can fill out something if you have something to say on the mining side. Yeah. Any questions, hit me up.
Yeah, that's great stuff. So everybody, if you can go check that out, go check out the accredited investor kind of form and everything like that, and fill that out as you wish, I suppose. But another aspect one last question before I let you go here is, it seems like you're building a great network, and that's a big part of the value add that you bring to a lot of these companies is you have, maybe iOS engineers or just kind of like this network of people that are in and around the Bitcoin space in some way, shape, or form that you can bring to these companies and just like kind of help them with their business, help catapult them and bring them along. So if somebody maybe isn't an accredited investor or, has some sort of skills that they think that they could help maybe some of the companies that you have in your portfolio, do you guys have like a place where they could come or as a way for them to reach out to you where they could say like, hey, I have these skills that maybe I could be of value to XYZ company?
I would say probably to still fill out the application, even if you have no intention of clicking any sort of button or doing anything, but at least like we'll know from that form kind of what areas you're good at. And this is very crude the way we set this up. I mean, we have a joke. It's like we're good at investing in Bitcoin companies. We're bad at websites. No, I mean, but there's things on there to where we get an idea, and then we'll at least have the information moving forward. Can hop in the Telegram channel. Sometimes there's word of jobs or other things in there. If it gets too noisy or spammy, I'm going to have to figure something out, but so far it's okay. There's some opportunities and stuff that are in there. And, participating in a scout program, if that's something that you're interested in, you don't have to be accredited for that. You don't have to be accredited to be an advisor to a company. You don't have to be accredited for many things. So you can always participate that way. But yeah, letting us know what you do is great. That's probably a good way to get started.
Awesome stuff. Well, Muzz, thank you so much for your time. Why don't you tell people where they could find you and what else you got going on?
Sure. Yeah. Well, I'm going to Vietnam for the conference out there, Da Nang, for the Lightning Con. And then right after that is in Pouch, Philippines. That's being put on out there on Bitcoin Island. So that'll be fun too. And then, I'm going to be there. That's going to be awesome. And then May, of course, Miami. And then BTC Prague. I'm going to hit that too. I'm very excited. I've always wanted to go to Prague. That's pretty much it for a lot of the travel. There's BitBlock Boom, of course. It's going to be tons of fun in August. I'm sure I'll see you there. And then, Unconfiscatable in December. Those off the top of my head, I think it's great that the conferences are like back. Oh yeah, and Baltic Honey Badger, of course. But it's great that the conferences are coming back. And I'm just Mike Jarmuz on Twitter, and that's it.
Yeah, and all that stuff will be in the show notes. The Lightning Ventures website will also be there, and in the comments on YouTube if you're watching it there. So be sure to check them out, and yeah, give Muzz a follow, and come up to him on one of these conferences. Muzz overall great dude, so I can attest. I met him in person a couple times, so give him a beer or coffee or something like that, depending on what he's doing. So Muzz, thanks so much, man. I really appreciate your time tonight.
Thanks, Brandon.
All right.